This episode is brought to you by Mortgage Workflow Partners and the Mastering Encompass series, both for users as well as administrators. You can find out all the information about it over at masteringencompass.com. Also, if you'd like to check out what we're doing on YouTube, go ahead and subscribe to the channel using the @MasteringEncompass handle. And make sure you stay up to date on all the information, not just with podcasts, but also video content that we bring to you as often as possible. Now let's get on to the episode. Hey everybody, welcome to another weekly update of the market. My name is Larry Bailey with Mortgage Workflow Partners. This episode is brought to you by Mastering Encompass. Guys, admins, users, whoever you are, if you use Encompass, head over to masterencompass.com, find all the information you're looking for. Take advantage of the new Mastering Encompass chatbot too. It'll actually answer your questions in natural language and help you understand what you're trying to find out from lessons or posts or information, anything that's over there. Go check it out, masterencompass.com. Let's get into what's going on here in the market. This is going over for the information that happened in March 17th in review. This is last week. The headline here is Fed pause continues, housing data surprises. Here's what we're going to talk about. The Federal Reserve kept interest rates unchanged, in case you didn't know that, as anticipated. So while unveiling its latest economic projections. Meanwhile, existing home sales and housing starts exceeded expectations, even as homebuilder confidence declined. Go figure. Here's what we're going to talk about today in this episode. We've got Fed maintains current rate, but signals economic outlook. We're going to talk about that. Next story is existing home sales exceeded expectations. That's followed by the story of homebuilder confidence drops to a 7-month low. We've got another story on housing starts rebounding. We've got another story for retail sales disappointing. We've got some information about the latest unemployment claims reflect the ongoing trends. We've got a family hack of the week to talk about, and then we're going to talk about what to look for this week. So let's get into it. Our first story here is the Fed maintains current rate and signals economic outlook. The Federal Reserve has opted to keep its benchmark Fed funds rate steady at 4.25% to 4.5%, maintaining the hold established during the January meeting. This decision to pause further rate cuts was anticipated, just so you know. The Fed funds rate, as a reminder, it's a short-term rate used for interbank lending. It influences various interest rates across the economy, although it does not directly impact mortgage rates or long-term rates in terms of borrowing. Bottom line of the story is the Fed has also released its summary of economic projections as the SEP for 2025. It acknowledges the considerable uncertainty surrounding the economic landscape. Fancy talk for they don't know what's going to happen. They project a slowdown in GDP growth for this year at 1.7%, down from the previous estimate in December that they made of 2.1%. And while inflation is expected to exceed earlier forecasts at a core PCE, remember, pop quiz, that's the personal consumption's expenditure, which we know is the Fed's preferred measure of measuring inflation. They expect it to exceed earlier forecasts of 2.8% compared to 2.5% that they made earlier. So they think that the core PC is going to go up, even though GDP growth is going down. Additionally, the unemployment rate is anticipated to rise slightly to 4.4%, up from currently at 4.3%. Nonetheless, most Fed members continue to foresee 2 rate cuts later this year. I don't know. In a further development, the Fed announced plans to allow its balance sheet runoff starting in April, which positively affected mortgage bond market. Okay, people playing games with money. We'll see how that turns out. This next story is existing home sales exceeding expectations. So we've got a fancy chart on here. If you're listening to podcasts, thanks very much. If you want to see exactly what's going on the screen here, go over to masterencompass.com, especially if you want to see the family hack of the week information further in this episode. So we've got some information on screen that shows in February, existing home sales saw a notable uptick, jumping to 4.2% from January's sluggish start of the year. This increase surpassed expectations of a 3% decline. It went up 4.2. It was supposed to go down 3%. That's a 7.2% swing in case you're doing the math. The February report also likely reflects sales from buyers who were shopping in December and January when mortgage rates were higher, making the upside surprise even more impressive. The bottom line of the story, Yang, is the momentum for home sales is flashing encouraging signs. That's a quote according to the National Association of Realtors chief economist Lawrence Yun. He noted that more inventory has brought some buyers back into the market. However, despite February's inventory climbing to 1.24 million units, the situation remains tight compared to pre-pandemic levels. Notably, only 848,000 of those listings were actually active. The remainder of those were either under contract or not available for new buyers. This ongoing supply shortage combined with pent-up buyer demand bodes well for continued home price appreciation. Here's the next story. Home builder confidence drops to 7-month low. So we've got some charting on here from the NAHB. And basically, the home builder confidence declined for the second consecutive month, with the National Association of Home Builders, that's the NAHB, reporting a drop to their confidence index from 42 in February to 39 in March. And so the figure represents the lowest level since August of 2024 and falls well below the neutral benchmark of 50, signaling contraction. All three components of the index, which are buyer traffic, current sales, and future sales expectations, those all remain below 50. Notably, current sales conditions down 3 more points to 43. They reached their lowest level since December of 2023. What's the bottom line here, gang? The key factor is dampening builder sentiment were economic uncertainty, high costs, and tariff threats, though they expressed hope that a more favorable regulatory environment would improve business climate, according to NAHB. Okay. So it just strikes me as funny, personal comment here, that the group who is complaining about government is now hoping the government's changes will now hopefully positively affect their business. Okay, we'll see how that goes. Housing starts rebound. We've got some new home construction information here. So in February, we saw housing starts rising 11% from the previous month, rebounding from a disruption in construction activity in January due to harsh winter weather, particularly in the south and northeast regions. These regions saw even larger increases in that production. However, building permits, an indicator of future construction, they dipped slightly from the prior month. So the bottom line in this data here in this story is overall, while February's housing starts improved to a seasonally adjusted annual rate of 1.5 million, they remain below the average household formations of 1.8 million per year seen over the past 5 years. So it's a 1.8 million household formations per year is fairly steady because it's been going on for 5 years. This gap between the 1.5 million and the 1.8 million, this gap highlights a significant mismatch between demand and supply, which again should help sustain home values moving forward because you have less supply than demand. And you know how that equation goes. This next story is all about how retail sales disappointing. So retail sales rose a modest 0.2% in February, well below the expected 0.6% increase. Additionally, January sales figures were revised downward to a 1.2% decline, the largest monthly drop in nearly 4 years. However, the control group, which excludes auto, gasoline, building materials, and food services, saw a better than expected 1% rise. Bottom line here is retail sales are a key indicator of consumer spending, an essential component of economic activity, of course. While February's increase was an improvement over January's sizable decline, the data so far this year suggests consumers are growing more and more cautious amid economic uncertainty. The Fed members will closely be monitoring future retail sales reports, as the strength of consumer spending, of course, will factor in upcoming monetary policy decisions. Again, and if you didn't realize how much consumer spending really fuels our economy, I think the last number I saw was like 60-something% of consumer spending fuels. So basically, we're spending money to keep ourselves in jobs. It's kind of crazy if you really do look at that deep. It's kind of crazy. Latest unemployment claims reflect ongoing trends is the next story. Initial jobless claims increased by 2,000, bringing the total to 223,000. Overall, this figure remains stable. Meanwhile, continuing jobless claims that climbed by 33,000 to 1.892 million, close to a 3-year high. These continuing claims have stayed above 1.8 million since last June. That's June 2024, indicating a concerning trend, of course. So the bottom line here is the most recent unemployment data continues to tell a consistent story. That story, of course, is although new claims are still at historically low levels, The sustained rise in continuing claims points to a longer duration of unemployment for many job seekers, which totally sucks. Here's that family hack of the week. Hey guys, did you know it's March Madness time? It's in full swing, and you've got a recipe on screen now for some chicken nachos from All Recipes, which make for a slam dunk on game day for a snack. This recipe serves 6. That's so cheesy. Anyway, check out the recipe on there, and good luck to your team. I know there's a ton of upsets, and I think I heard like the only active brackets that are still left to bet on are like 0.000001%. Whatever. That's why I don't gamble. All right, here's what we're looking for this week. The critical report this week will be published on Friday, focusing on the Federal Reserve's preferred inflation metric, pop quiz, personal consumption expenditures. Hopefully you got that right. Additionally, housing data will be released throughout the week, including appreciation figures of new home sales on Tuesday, as well as pending home sales on Thursday. Thursday will also feature the latest jobless claims and the final estimate of the fourth quarter GDP. So remember, every GDP has 3 measures. It's the initial, the adjusted, and the final. So we're getting our final estimate of fourth quarter GDP from 2024, which will tell us, did we actually grow as much as we did or did we not? We'll have to see. My name is Larry Bailey. Thanks very much for always joining us here on these weekly updates for the market. We'll catch you on the next one. Bye for now.